Malaysian government is putting a lot of emphasis to build the Islamic financing market in Malaysia, and therefore they are offering some concessions, some withholding tax concessions. If you do, if you do participate in that, they are encouraging companies to move towards that. So maybe if we could separate the two, I think if you go to other markets, maybe in the Middle East, I'm not sure factually how much more expensive it would be to raise financing in the Islamic, if you have to go down the Islamic route. But if you look at it, a sukuk issuance is a different sort of a different product. And that's as far as I think.
If I can just add, it's actually the cost of what you call the compliance. What happens is that when you go into Islamic finance, it's not so straightforward like a bond market where you can just get a banker and then you just issue the bonds and all that. Because I'm into merger and acquisition, I work in the Middle East and all that before, and quite a lot of the time the finance chief CFO decided to pull out of Islamic finance, and because of the compliance and the cost is actually definitely much higher than your conventional bonds. I was wondering whether the bond market here, whether it's a GLC initiative or there are quite a lot of private sector to actually go into that market. I'm curious because over in the Middle East, most of the sukuk bond is actually with the government. Private sector wise, most of them actually cannot afford to go that route because of the cost and the compliance. I don't know.
If you looked at Q1 of 2012, where Middle Eastern issuers and Korean issuers have come and issued sukuks in Malaysia and then have swapped it back and taken the money back to their country. So it is well, it's not just led by GLCs. I think it's the Malaysian government is encouraging corporates to look at it, but it is a wide-ranging sector that they're involved in.
Okay, instrument, and that also, of course, supports the growth of the halal industry. Saif was talking about the Aean challenges, you can say, or trends which we see in Aean with 2 trillion GDP and a growth rate of 5%. You can consider that as the 9th largest country in the world, right? And the 3 trends are on the infrastructure, where a big source of growth, right? As well as government support, which then should promote consumption and intra-regional cooperation, which then thirdly is ASEAN companies expand to go beyond ASEAN. And then John highlighted on the lack of cohesiveness of the ASEAN economic community. However, he thinks this is the year, right, where ASEAN is starting to happen, right? And key task here, of course, is organizing the ASEAN business community, right? Banks will play a crucial role, right? And therefore it's also crucial to set up a banking framework, which, however, at the current stage is not there. Lastly, we had Tuan Haji speaking about the progress on ETP, which met already the first, or has passed the first milestone, and from the 12 national key economic areas, financial industry was identified as the 2nd largest industry. Here, framework has to be fixed to enhance the possibility or the capital.
I'd like to now invite our Chairman, Mr. David Jones, to pass the token of appreciation to all our speakers. Thank you very much to Mr. Eckart Koerner for being the moderator, and our speakers, Mr. Saif Malik, Mr. Sultan, Mr. Syed Alwi bin Mohamed Sultan, and Tuan Haji Farisan Haji Mokhtar. I'd like to comment also regarding the Tuan Haji Farisan presentation that in October, EU-Malaysia will be organizing a green financing training program to bridge the gap